Hello, I'm Nisha Pillay, and I'm here to bring you the headlines and the analysis from the World Payments Report 2011. And with me to discuss the report from RBS, we have Scott Barton, who's CEO of Global Transaction Services, and from Capgemini, Jean Lassignardi, who is Global Head of Sales of Marketing there. Welcome to you both. So the World Payments Report shows that global payments have been notably resilient despite economic turmoil and the financial crisis. Can you give us the regional trends, Jean, behind the numbers?
Yes, sure. Overall, we had a 5% increase 2009 versus 2008, which is remarkable in this year of crisis. Of course, there are some significant variation. The largest region, Northern America, which accounts for 40% of the total non-cash transaction, grew something like 1.8%. Then Europe, which is about 21% of the total amount, grew a little bit less than 5%. On the other side of the equation, fast-growing countries like mature Asia countries grow, double-digit and more than double-digit growth. So a very broad panel of growth, overall a 5% one.
What's the implications of this kind of growth for you and your customers?
I think institutions that operate around the globe, have physical presence around the globe, are in a good position to sort of understand those trends and issues, and then respond in terms of the products and services they provide. You can do it if you're a domestic player, but I think having that local nuance and being based locally, understanding what's driving those trends is important. For us, what we're seeing in terms of customers, in terms of their requirements, is they're looking for greater harmonization of systems. They want essentially to sort of plug and go in terms of payment systems so that they can actually move between providers. And that requires us to respond in terms of the standardization and the flexibility of our systems as well. So being local around the globe is important to understand those requirements, and then adapting and being flexible around the solutions we provide is also key as well.
Jean, when we look at non-cash transactions, which instruments, which product lines are fueling the growth?
We see, first of all, cards. Cards is about 40% of the non-cash instrument in most countries, and we have seen a 10% increase 2009 versus 2008. And more surprisingly, the mobile payments that we anticipate growing fast is growing even faster at a pace like 50% a year. And that may reach 15 billion transactions by 2013. And even more surprisingly, if the pace continues, within the next 10 years, it can be the same level than cards in mobile payments, which of course is something very interesting in terms of dynamic in these instruments.
And another thing that's really affecting your industry is the sheer amount of regulation. It's almost like a tsunami of regulation wherever you look around the world, affecting global payments. How do you begin to analyze it?
What we have done with the team, just a broad picture, is we identified 27 key industry or regulatory initiatives these days that are under scrutiny and under process. We map them per country, for some of them being global reach, other one being more continental. We also try to understand what we call the heat map, which is will impact on payment will be very high or less important. And finally, what we have done is that we have mapped them against or as a key influence into what we think are the 5 key trends in this industry, which is, of course, transparency of services, which is innovation, standardization, convergence, and systemic regulation or risk. So that basically is an enormous impact and part of the report.
One of the hottest of the regulations facing the industry is, of course, Basel III. It's been in the news a great deal. We've looked at it from the capital adequacy point of view, from the trade finance implications. But what about the impact on global payments?
So I think, clearly there is an impact, and we're working through that as an industry at the moment. I think if you step back and look at the broad umbrella of Basel III, implementation between 2013 and 18, You've got the trinity of focus on capital, on leverage and liquidity. Clearly intraday liquidity is a subset of that, but they are all very much interconnected. Within BAO have suggested they're going to come out with guidance around intraday liquidity at the end of this year, probably before the end of this year, which will be helpful. If we take the UK, for example, so the home country for RBS, the regulator, the FSA, has been very proactive around talking about the level of granularity and information it requires around intraday, both for banks that clear for themselves, but also for institutions such as RBS that clear for others as well. Significant focus on making sure we have sufficient MI, we have sufficient handle on the costs of intraday liquidity, and we can actually use those tools to act in a predictive way in terms of where it's going. So a lot of things going on at the moment. As an industry, RBS, for example, is working with SWIFT on a working group to think about the implications of intraday. So a lot of activity, principally focused around what's going to be the cost of intraday, what is the information requirements to help manage it better, and then we can move to, I guess, a more formalised discussion with BAO when they come out with their findings at the end of the year.
The World Payments Report takes a forward-looking view at some other industries which have also gone through big challenges. Which industries did you look at?
Like payments, let's think about other network industries. And let's think about some of the characteristics that we know exist in payments that exist in some of those other network industries. So if we think about levels of regulation, for example, if we think about the level of technological advancement, or we think about the nature of competition, and as we went through those type of characteristics, it became fairly obvious actually that the energy sector and the telecommunications sector were two good parallels in which to map the payments industry and then look at those characteristics, how they stack up, and then perhaps extrapolate what that may mean for the payments industry and whether that mirrors the development of those two industries.
So when you look at these other industries, what are the implications for payments? How much time does payments have?
You have three phases. One that is already there, it's the evolution phase. Then you have another one, the next one, which is a transformation phase, where under the pressure of this key strong trends that we described, all the players in the industry is forced to review process significantly, optimize cost structure, optimize sourcing, and think about partnership. So that's the 4 to 7 type of years time perspective. Now when you look further than that, what we really think, and that the report highlight, is that we think that there will be there may be a polarization along the value chain based on the pressure and the commoditization, as we mentioned, regulation, competition, technology. Key players may have to really focus on one or the other side of the value chain. One may be, processing, clearing, settlement. Everything relates to size, scale, industrialization, mass. On the other hand, others may decide to focus on the customer interaction, which is everything around intimacy with the customer, refining solution, added value services, all that area which is really close to the customer, which is more retail versus wholesale.
So at a time of such massive change up ahead, Scott, as a bank, how do you see the opportunities and how do you avoid possible pitfall?
It's all about making sure that we manage and adapt to the change that we know is coming. So if and we've seen it historically, so no surprise the decline of checks, for example, the emergence of cards, whether we then move on to the next iteration of that is we see the development of mobile payments that start to eat into the market share of cards, for example. So I think we're very aware of the sort of evolution of this. For us, we need to be front and center, both with making sure we manage the regulation that's there as well, and that we adapt and manage that in a positive way rather than react to it. Partnership, push and pull type relationships with a regulator are going to be key there. I think making sure that we partner with other institutions, whether that's in the consultancy world or whether it's in the financial services world, to make sure that we're pulling resource, because these are issues that face all of us, not just individual institutions. So I think partnership is important as well, and clearly listening to our clients.
Scott Barton, Jean Lassignetti, thank you for joining.